Welcome to The Explainer. You know, India's powerhouse stock index, the Nifty 50, feels like it's just holding its breath. So today, we're going to decode what's going on behind this big pause. Is this a clever, strategic wait, or is the market just plain stuck?
Right, let's just dive straight into it. This is the question on every single trader and investor's mind at the moment. It really feels like the whole market is just standing at a crossroads, and it has no idea which way to turn next.
So, on January 7th, the Nifty 50 moved by negative 0.14%. I mean, that's a tiny, almost nothing number, right? Well, not exactly. What's so fascinating here is how this little number actually signals a huge debate, a real tug-of-war happening just under the surface.
So what is really going on? I mean, the market's not falling, but it's not really rising either. It's on standby. And we're about to break down exactly what's causing all this indecision.
Okay, I want you to picture the market pacing back and forth, but in a really narrow hallway. It's just bouncing between these two walls, 25,850 on the floor and 26,350 on the ceiling, just waiting for some kind of clear signal to either bust through the door or turn around and go back.
And you know, this indecision actually has a name on the technical charts. It's called a doji pattern. And it is the perfect visual for a shrug. You get this shape when the opening and closing prices for the day are pretty much identical. It's what happens when neither the buyers nor the sellers can get the upper hand, which perfectly captures the standoff we're in right now.
So who exactly is pulling the ropes in this stalemate? Let's take a look at the specific forces that created this big tug-of-war on January 7th.
Well, the pressure on this particular day was pretty mild, but it was definitely there, leaning a little negative. Both the Nifty 50 and the Sensex, as you can see, ended the day just slightly in the red. So it wasn't some big dramatic drop, more like a gentle but persistent selling pressure all day.
And here it is. This is the heart of the conflict. On one side of the rope, you've got the FIIs, that's the big overseas funds, and they were selling. But on the other side, you had India's own domestic institutions, the DIIs, and they were buying up everything the FIIs were selling.
So what you end up with is this, a perfect stalemate. A perfect balance of power. For every single seller, there was a buyer ready to step in. Neither side had enough muscle to push the market one way or the other, and the result? The market just went sideways.
And the technicals, well, they back this story up completely. The Relative Strength Index, or RSI, which is basically a speedometer for the market, is just hovering right there in the middle. It's not hot, it's not cold, it's completely neutral. The market's engine has basically cooled off, and right now, it's just idling.
Now this quiet can't last forever, right? Something has to give. So let's look ahead at the major events coming up that could finally give the market the push it needs to break out of this deadlock.
First off, there's pressure building from the outside. On January 8th, we're expecting some huge economic news from the world's two biggest economies. We're talking inflation data from the US and trade figures from China. Believe me, these numbers can send ripples across every market in the world.
But at the very same time, the pressure is also building from right here, inside India. We're about to get insights from our central bank, the RBI, and a really critical earnings report from the market heavyweight, Reliance Industries. These local events could be just as big of a deal.
So with all of these forces swirling around, what are the specific numbers that the pros are watching? Well, there are two key figures that could really act as the main trigger points.
First, keep a close eye on crude oil. If that price drops below $72 a barrel, it could be a major signal for the bears. Now, why is that? Well, because cheaper oil often points to a global economic slowdown, and that is usually not great news for stocks.
And at the same time, you gotta watch the currency exchange. If the US dollar gets stronger and climbs above 85.50 Indian rupees, that could make Indian assets look a little less shiny to foreign investors. And that could lead to, you guessed it, even more selling from the FIIs. Okay, so let's put all the pieces together. What are the potential paths forward from here? Well, analysts are looking at three main scenarios that could play out, and it all depends on which of these forces wins the tug-of-war.
This table really lays it all out pretty clearly. Let's just walk through it. So, scenario 1 is a bearish breakdown. If the Nifty falls below that 25,850 support level, the next stop could be 25,700. On the flip side, we could see a bullish upside if it manages to break above 26,200, potentially aiming for 26,350. But that middle path, the one many think is most likely for now, is that it just stays range-bound. Yep, still stuck in that hallway.
So the big takeaway for traders right now is just one word: caution. The data is pointing towards strategies like a straddle, right around the 26,000 mark.
Now, put simply, that's basically a bet that the market is going to stay flat. It's a strategy designed for exactly this kind of indecisive market.
And all of this leaves us with the big question. With global data, domestic news, and these critical price levels all coming to a head, the stage is absolutely set. The players are just waiting in the wings. So what do you think? What will be the one catalyst that finally breaks this silence and tells the market which way to go? I guess we're all about to find out.